Hello, everybody. I am just here to update the markets, as I'll do once in a while. I don't plan on doing it all the time. But here's where I predicted the market would be uh, in April of 2022. I thought it would come down, do all this stuff, and I thought it would get up to here. Um, it's possible that we go up tomorrow as the Fed makes a decision, but I don't think so. I think things are looking pretty bad. So I don't see this happening anymore. I just kind of threw out a 1 year long guess, and I've been very accurate so far. So I would not go by this anymore, but I would expect us to come down to possibly here, this major trend line, as I can show. It's kind of curving up like this. So I think we could come down and test this one more time. Maybe not. Oops. More than likely we just come down to this area. Or my real plan is to come down pre-COVID, which is down here. So kind of lines up with like coming down and hitting right here, would be my guess. And the reason why is there's just so many bad things that are happening in the market right now. We can take a look at wages. As far as inflation goes, you will know, or as far as gold goes, you'll see when they have more GDP than the wages. When the GDP is higher than the wages, gold does pretty poorly. But when the wages are higher than the GDP, like throughout this area, gold peaked in 2011. Gold tends to do really good. Same with this area. Gold did really good right through here. Again, through here, gold did really good. And I think GDP is going to come down. I think wages are going to come down. So it's hard to say. It's hard to say if wages will be above GDP, more than likely, because I think GDP is going to crash. And I don't think people are going to accept less wages. It's just too much inflation has gone up, so I don't think people are going to expect their wages. They'll just quit their job. So I think gold's going to do really well here. It could just flatten out for a while, but eventually it will do really good once they have to print again. Here we can see that oil has been just plummeting all the way back from when it was really high in June 22. It's just been crashing down, and the whole time it's been crashing down, they have been cutting back on production. So when you have production getting cut back and it's still dropping, that means demand is dropping too. So that is not a good sign, seeing that come down. Here's your inflation. Ever since they started printing in 2020, it's just gone straight up to the moon. I mean, it's always been going up since they took us off the gold standard, because now you have nothing to base it off of. It's just paper. So as much as they print, as much as inflation is going to come up. So we went really sky high. We're probably going to have to return to this trend at least for things to become stable. It just can't be going at that rate. This is your personal consumption. So things are just getting too expensive for people. It's just going vertical. Real yield. So if you want to actually try to save money, you just want it sitting in your bank account or something, or bonds. You just want to buy some bonds. You're actually finally able to make some money, but it's barely any. So if inflation goes even 0.5% higher, you can't make money by buying bonds. So the real yield was down for a very long time, actually. So finally nobody has faith anymore. So nobody's buying the bonds, so they've gone up. And you can see that here. Here's a 2-year. This is a 40-year trend we have broken. So this is real nerve-wracking, because every time it's came up to here, see 2006, we had a major recession. Here's the dot-com bubble, major recession. 2018 we had a recession, a minor one, real small, and then the Fed pivot came through and brought us back. So now we've actually broke through this level we printed ourselves to avoid the recession in 2020, let's say. So kind of funny how that timing worked out right there. So that's real nerve-wracking that we're breaking a 40-year trend on the bonds. Here's my crash indicators. Again, this is the 10-year minus the 2-year, kind of what we were just looking at, but it's been very good at predicting recessions. Here's, again, the dot-com, the great financial crisis. We are below both of those. Both of them. So that's pretty major. That's a major indicator screaming at you. And that's the smartest money in the world trades at. And these are junk bonds. So I'm thinking it's hit here, hit here, hit here. I think junk bonds have to come all the way down to here before we reverse into the market. 10-3, kind of same thing. Here's producer price index. So, and this is all commodities. Just falling off a cliff. Demand for commodities just dying straight. And it's, hit this trend perfect again. Coming straight down. Here's businesses, debt. How much debt they have in the business. We haven't seen this since the bubble in 2000. So we hit that again. We're coming up. Let's take a look at another one. Kind of the inflation meter. What we have here is what I believe what causes inflation. I don't hear anybody talk about this. Nobody has ever mentioned this, but I thought about it and I thought, what if everybody dies or vanishes off the world and 2 people are left with all the currency? You're going to have some major inflation, right? Like everybody's going to have like $20 trillion in their bank account. The 2 people will. So I think money printing compared to the population is probably one of the best indicators of where you'll see inflation. If they start printing too much money and the population isn't going with it, prices will go up. So you can see through the 80s where prices just skyrocketed. They had the M2 is the money supply, how much money is in the market. So if they start printing money, M2 goes up. They printed more money than the population, and through here we had just had a crazy amount of inflation. They had to jack interest rates up to like 17%. Volcker had to kill the market, and that's what you see here. All right, so here again we popped up above our population. You can see the population flatlined in 2020. And they started printing. And if they start printing again and this goes above, we are going to have some major inflation again. Throughout this whole area, we had deflation. I think they had a hard time creating inflation. They were printing so much money they couldn't do it, and this is the reason why our population was growing so fast that the money supply wasn't keeping up. So let's take a look at another chart. Take a look at some indexes here. What is this? That's a mess. That's just kind of the whole market I look at. Don't need to look at that right now. That's just so I can compare stuff. This is a gold divided by the SPY. So every amount of gold, that's this number here, and then divided by how much money is in the SPX, the market indicator. So every time we've broke this trend, we've gone into recession too. So we're coming down, we're breaking it again. This is usually a breakout for gold. This is the gold chart down here. So like here you can see it broke through, started going up. Here's where gold starts to go up. And it peaked right where it broke this trend line and started heading down. That's the peak of gold. Same here. It broke this trend line right here. Broke it, went up. Same gold. Bam. Goes up. Here we are crossing over the line. We are breaking through right now. I expect gold go up. Very, very simple, very, very accurate for the last 50 some years. So that's my consensus on that. Let's take a look at employment. This is just how much money they injected. They said they were going to start doing quantitative tightening for the last few months, and they went up, and then they started bailing out banks. So this just keeps going up. They're not tightening any amount. Whatever they do tighten just goes right back to the banks. So not too much here really. But you can see we're in stuff is changing. Like this is a long trend. This is since the great financial crisis. These charts just started inverting. So more indicators. Delinquency rate. So what we have here is the Fed funds. So as soon as they start jacking up interest rates, you will see the blue line is people being delinquent on payments. So right through here, great financial crisis, bad. Through here, the bubble for the .com went up because they jacked rates right through here, jacked rates through here, jacked rates through here, and they jacked rates, and we broke this trend, so you can see this is a trend. We're breaking this trend, so expect delinquent rates to skyrocket real soon. Consumer sentiment is always a good indicator on when you'll see. It's really good at predicting when the market's going to crash. So as you can see, the sentiment was dropping in 2007. This is the stock market down here, the SPY. So you can see the sentiment starts dropping off, and then the recession hits right through here. Sentiment drops off. Bam. All right, our sentiment is the lowest it's ever been since I started recording this. So you're talking, what is this, 75 years? We're even lower than that point. So this is the worst sentiment we've ever had in the market. And it's still hitting this trend line. We're reversing, we're going down. We're probably going to drop down to here. So, that's a big indicator. And you can see the sentiment dropped off way back here in 2020. The sentiment has not came back since 2020. It's still going down. So, and that's because of inflation and how much money people have to spend. They're all spending it on groceries and gas now. So, big indicator, really bad. And it's one of the first to start going up too. So as soon as it breaks this trend line, I'll be more convinced it's going up, but it is not. Lumber, we can take a look at lumber. It used to be a really good indicator on what the market was going to do. It's not as accurate anymore, but it still says something. Like here's 2018 when we had a little hiccup. 2008 it went down, but you can see where went up in where lumber went in 2021 off the charts, went up here, and that's probably lumberyards knowing what's to come, knowing the housing market was going to crash. They tried to get every penny they could before the crash happens. You saw a lot of that, like Better Bath & Beyond, that's about to go bankrupt. They saw it coming, so they played games with the market. Well, I don't know if they did, but I assume hedge funds knew that it was going to go to zero. So you can see just lumber falling off cliff, even with inflation. So it should be going up with inflation, but it's not. Here's our debt percentage of GDP. Totally see this coming back down. It's just been falling off a cliff. And that's just tightening, that's recessions follow that. housing priced in gold. So how much gold it would take to buy a house. You can see we were in a bubble in 2022. So as gold goes up, this will still come down, but also if housing comes down, we will come down. So it's very possible we get another big crash like this and break right through this trend we've been in, and houses will come down a lot. That's my guess. It depends how much money they print, though, too. Which gold will go up, so. So same thing, kind of just the bonds chart that I was showing earlier in the beginning, that every time we had this flip, this is recessions. So all the recessions, I thought we would end up with a recession here, so I was surprised. I thought that'd be the end of it, but no, we broke through. So, yeah, it's not good. I think that's about it. So maybe I could show you a couple other things that are pretty scary right now. You take stocks like U.S. Bank. So U.S. Bank has been just ever since 2020 COVID. It's just been struggling. Like, it's one of the few stocks that didn't go up. Most stocks are up a mile, Take Amazon or something. Well, Amazon came back down. That's a bad example, but you can take the SPY. You can see how high we are above pre-COVID. But U.S. Bank has been just falling off a cliff. So we've had a lot of bank collapses, like Silvergate, that have just went straight to zero. First Republic just went out the other day. So this was a $140 stock, great earnings, right up to the last minute. And their earnings they just went straight bankrupt, belly up. They couldn't do it. Their debt went sky high. Here's a couple banks I am shorting. So I'm shorting this bank. I'm shorting this bank. And you can see they're all just starting to collapse. Shorting this bank. Another one. Shorting this one. So, and the reason I am is because I can show you on this site the reason why. So if we look at like the bank that just collapsed, First Republic, we can take a look at their financial health, and we can see what happened to their debt. This is happening to a lot of banks, well over 30 that I looked for. I took last weekend to look for banks that this is happening to. So their debt is just going sky high because they took out a bunch of, there's a bank run. So people are taking out money where they're not secured by the Fed, anything over $250,000. So they're taking their money out, and the banks are having to sell assets at a loss to be able to give people their money. So it's typical bank run. So if we take a company like the one I'm shorting, I don't know why this is doing this, but we can just see their debt is just going sky high. Even U.S. Bank, one that's local, we trust. We think they're solid. They're not. U.S. Bank is a lot of debt that's happening really fast. So it's pretty scary. The banks are in serious trouble. I think it's all planned out. I think they want to consolidate all the smaller regional banks into one major bank. So I think it's just part of their game. They saw this coming. They'll introduce... just trying to find this one here. They'll introduce central bank digital currencies when this is all over and say how great it is, and that you don't have to worry anymore. They can just print as much money as they they need, and well, they don't print it anymore. They'll just add digits to your account whenever you need. So I think it's pretty scary. Here's that other bank I was shorting. That's their debt is just, they did so great for look how many years, and now just instantly the high interest rates are just killing banks. So, and if banks, they can't loan, they can barely pay people, so they can't even loan companies. So all the companies that are zombie companies that don't make earnings, they can't refinance their projects, their dreams. So all those are gonna collapse, and then people lose their jobs, and then dominoes start falling. And the Fed needs that to be able to drop inflation down. But as I showed you with the population chart, it's not good because our population is going to be dropping. So if you take a look at the population over the last 20 years, it's just been plummeting. People are having less and less kids. So we're going to have that fighting us for the next 15 to 20 years, I believe, where they're going to have a really hard time printing money without inflation. So just wanted to update you on all of the information I am seeing. Hopefully it's helpful. Hopefully you take it serious. It is possible the Fed does just keep printing money. If they do, you're going to see gold go to the moon. You'll see Bitcoin go to the moon. You'll see all these meme stocks go to the moon. But it's not productive per se. It's just imaginary money, and it just keeps jacking up prices. So, and the only reason they do it is for voting. There's no reason to have inflation and keep spending like a madman. And what you're going to see in the next month or so is a big fight over the debt ceiling. They're going to make a big deal of it. It's going to get really played out. Eventually, they're going to have to do something about it and print money. But expect that in the next few months to get real dirty. And so just want to give everybody a heads up. I usually keep all this stuff to myself, but it's getting scary where I want everybody else to know what is happening in the real world, because the media does not talk about it. So a lot of signals pointing very bad, very, very bad. And we will know in the next week or so what's going to happen. So good luck.